Look at all of the U.S. market indices and what's going on as far as stocks moving on the open. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Let's take a look right now. Taking a look at the overall market, we're seeing the Dow Jones trading at right around 19,805. I'm going to take a look at the futures. They're trading down about 17, so they're off their best levels of the morning, now starting to look at the downside. You have small caps, the Russell 2000, trading. The futures are trading down, actually up a point right now at 1371 and 40 cents. You have the Nasdaq, which was the strongest performer yesterday, basically up about 75 cents at 49.6275. That's on the futures. And taking a look at the S&Ps, the S&Ps are down $1.50 at 2,263, now down $1.25. You have the dollar. Dollar strength has firmed up right here. We had some considerable weakness yesterday. Overnight session, it firmed up. We saw that in the Asian markets and then also in the currency markets, both on the yen and the yuan. We're also seeing it pressuring the euro as well in Europe. The dollar's trading at 101.98.5, up about 46 cents. So the market is mixed at best. And we did have some important data that came out. Most notably, we had the employment data come out, and there's a couple things that we're seeing here. One is that we continue to see that the number of claims keep going down or staying lower, and you're also seeing consistent job growth over the last basically 5 to 6 sessions of coming out with the data. That the bottom line is that we're having a rising pace of job growth, but that pace in which it's going, the number of jobs being added is slowing. Now, what's the key takeaway to that? And that's why the market might be a little bit mixed this morning. The bottom line is that in spite of the fact that non-farm payroll or private payrolls are growing basically at a consistent pace, right around that 145,000, wages are rising, which is telling you one thing. Basically that the market, specifically the labor market, is running near full employment, right? That would be a term that the Fed would use, the FOMC. That is basically putting the inflation picture now more into play, because if we're going to have now big fiscal packages that are going to be coming through as far as stimulus, that's going to spur on further potential inflation risks. And you're also going to see that what has been dragging since this wage inflation has increased on GDP, we're going to have to start seeing that productivity might continue to increase, which means that they're not going to be firing as many people. They may actually start hiring more people. But they're going to have to pay more for the people that they currently have to keep them. So this is going to put a very interesting dynamic on the markets, especially domestically here in the United States. One thing that's notable is it is going to start putting some pressure and some volatility in the bond markets. The bonds right now are trading to the upside. So you could currently see, as a matter of fact, I'm going to take a look at the bonds. You see right now that bond yields are starting to pop. You're starting to see that bonds are starting to get pounded on the price side. So with those yields popping right now, that's going to be a positive for the finance section of the market. But the bond markets, those that are holding fixed income holdings, they're going to be under pressure. So let's take a look at what stocks are moving on the open. What's gapping up? Well, let's take a look at Gap stores. They had earnings and they came out and they had strong earnings. They had strong guidance. Now, this is important because we've had mixed at best results from same-store sales as well as earnings and guidance out of the traditional bricks and mortar. Now, Gap Stores has done a pretty solid job of managing their inventories. Stocks trading at $24.71, up about 8%. Now, the estimated move going into this event was right around $1.85, the stock being up around $1.40. This is very interesting. Their same-store comps came in up about 3% versus down 5% a year ago. So you're seeing that they also are expecting that their full year EPS will be modestly above or on the high end of previous guidance ranges. So Gap Stores, they're managing their business well, and they had a good holiday season. You can see year over year a definite increase in earnings. Helen of Troy, HELE, up about 0.4%. You're also seeing a small biotech that I watch, MNTA, Momenta Pharma, up about 3.5%. Both these up on better guidance as well as strong earnings. What's gapping down right now on the open is Ruby Tuesday. They had disappointing earnings, disappointing guidance. Stock, now of course I typically don't talk about $3 stocks, but this is something that you want to keep an eye on, is if it's actually something that could, some of its peers, right? You're going to watch this very closely. Ruby Tuesday's down about 13.3%. Let's see if this starts impacting other names out there that are in this consumer discretionary space, specifically in the restaurant space. You're also seeing some small apparel companies, some mid-cap apparel companies that came out with some earnings. G3 Apparel Group. Only reason why I know that is because I actually had one of my kids purchase a leather jacket from there. G3 is down 9.2%. I guess it pays to trade what you know, right? Full disclosure, I do not have a position in this. They lowered their fiscal 2017 guidance due to basically what they see as warmer weather, persistent lower traffic, and challenging retail environment. That's been consistent, that lower foot traffic and the challenging retail environment for these traditional bricks and mortar. We're going to watch to see if this continues as a trend and see how the business model and how they're going to meet that new shift from more of an online, on the phone, and how they're going to be managing their inventories. We also saw Shake Shack. Love their shakes. It's down about 1.8%. It's trading at $38.10. Now, the estimated move going in for the next 14 days, in other words, the range, is about $2.37. You did see that they made some leadership changes and appointments. You have Zach Koff as COO, and announces that CFO Jeff Utz will retire in 2017. They remain completely confident in the 2016 fiscal guidance ranges going into fiscal year 2017. One more big box bricks and mortar that I want to take a look at is JCPenney. JCPenney's down about 4% this morning. This is after watching some of its peers like Sears and some of the other peers as far as large big box retailers. They reported November, December comparable sales stores. They declined about 0.8% year over year. But they did basically reaffirm their EBITDA target of $1 billion for fiscal 2016. So again, disappointing same-store sales in JCPenney, and that's going to set a tone in that space. Finally, I want to take a look at some select mining stocks because we saw that those were on the move in the UK. Taking a look, mining stocks are under pressure. Gold has had an impressive move, but it's down this morning. GOLD is down about 1.8%. You see Harmony Gold down 2.7%. You're also seeing Rio Tinto down 1.2%. You're seeing BHP Billiton down about 0.5%. We knew those two were going to be under pressure when we saw the pressure of the miners over in the UK. We reported that at 8:45 Eastern time this morning when we looked at the action going on in Europe. All right, folks, that's it right now for the opening action here in the United States. We're going to be back on at 1:30 Eastern time here at MarketStream.live. We're going to be talking about all the strategies and what's going on into the midday. We'll see you then. Take care.